So what is the S&P 500? If you are new to the channel and want to learn how to make money while you sleep, subscribe and click the bell. That way you'll never miss a video. Most people know the S&P 500 as the stock market index that indicates how the stock market is performing overall. But what some people may not realize is that the S&P 500 is actually a basket of 500 different stocks representing 11 different sectors of the economy. So when you hear that the S&P 500 is up or down, what you're really seeing is a snapshot of how those 500 companies are doing. And since the S&P 500 includes some of the largest and most well-known companies in the United States, it's often seen as a good barometer for the health of the U.S. stock market and economy as a whole. So next time you're wondering how the stock market is doing, just take a look at the S&P 500. It will give you a pretty good indication of where things stand. What companies are included in the S&P 500? To be eligible for the index, companies must have a market capitalization of at least $8.2 billion, be based in the United States, and be listed on an eligible U.S. exchange. The list is reviewed and updated quarterly, so only the country's largest, most stable corporations are included. Can you buy S&P 500 stock? The short answer is no, but the long answer is a little more complicated. The S&P 500 is an index of 500 companies, so you can't buy shares in the S&P 500 itself. However, you can purchase shares in an index fund that tracks the S&P 500. This is a popular option for beginner investors who want to get a taste of the stock market without putting all their eggs in one basket. What does the S&P 500 measure? The S&P 500 tracks the market capitalization of the roughly 500 companies included in the index and measures the value of the stock of those companies. Market cap is determined by multiplying the number of stock shares a company has outstanding by its current stock price. So if a company has 3 million shares currently held by shareholders and the current share price is $4, then the company's market cap is $12 million. In other words, the company has a value of $12 million. The S&P 500's value is adjusted to consider only the number of shares that are traded publicly. The S&P 500's value is determined based on the market cap of each company. Each company in the S&P 500 is given a specific weighting, which is calculated by dividing the company's individual market cap by the S&P 500's total market cap. Therefore, companies with smaller market caps aren't weighted as heavily as those with larger market caps. What is the average return of the S&P 500? The average annual total return of the S&P 500 is about 10%. But if you invest in a S&P 500 index fund every year, that doesn't necessarily mean you're going to get a 10% return on your investment. Just to give you an example, in 2007 it was up 26%, but in 2008 it ended the year down 37%. You must be willing to outlast market volatility and have a long-term mindset when it comes to investing in the S&P 500. Click the video on the screen to see another money-making video.